If the market went to 80, I'm a very, very happy buyer. If the market goes up to 150, 120, I'm probably going to be in a sit and wait mode, and I'll just see how the market goes as it breaks through. Does it do it in one go? Does it have to correct? Do we have a bear market from that level? All TBC. I'm probably not going to be all in everything I've got at 150K unless there's some other evidence that comes in to tell me otherwise. I'll probably allow the market to find its level, and if that's higher, so be it.
Today, I'm excited to welcome James Check back to the podcast. James is a Bitcoin and on-chain analyst, YouTube host, and Substack writer, helping us navigate Bitcoin's volatility. Welcome to Bitcoin Edge, James.
How you doing, Paul? It's great to be here.
Great to see you on this exciting, different day. So we woke up, you woke up in Australia, and it's a big day for Bitcoin and crypto, apparently, with President Trump tweeting that he's adding XRP, Solana, and Cardano to the strategic reserve. He later wrote that he would add ETH and Bitcoin. What do you make of this?
It's a strange world, isn't it? I mean, it's one of those things where like this is the world of politics, right? It introduces all sorts of random probabilities and all these things. So, I mean, my view on the whole stockpile reserve thing, my base case is that it's probably likely they do the stockpile, which is where they just hang on to the coins that they already have. I think it was unlikely they go forward and actually buy additional coins, because that raises all sorts of questions of where does the money come from? And, you know, if you ask the average American taxpayer, I would assume they would rather the money goes into their community rather than buying particularly shit coins. So personally, I don't know what the shape and form of this, I think it's an executive order, but it does remain to be seen what shape this looks like. But from my perspective, personally, I would rather the government just stayed out of it. But, you know, the politics will do what politics do. It's going to be interesting to see what the shape of this thing is. Are they actively buying it or just holding on to it? A lot of question marks. Obviously, the market's responded quite positively to it. But again, it is early days, right? So this is one of those things where you get one of these event-based moves. Sometimes they stick the landing. Often they give you a bit of a gut check following it. So, you know, it's kind of unwritten how this plays out. But it's certainly, I think the way that I look at the whole thing, there's a level of moral bankruptcy, I think, is the right term, right? And I know that politics are what politics are, but it just, to me, I mean, you mentioned the first ones, right? XRP, ADA, and SOL. I'm going to just hazard a guess that they didn't make it into the strategic reserve in the Trump tweet based on their merits. I think they made it in there because they've got a bunch of guys on the inside who are incentivized for this to happen. So to me, it's just another example of the unfortunate world that we're in, where there's just this kind of disconnect between, you know, what is morally right. And granted, it's more transparent. Politics is always up for sale, but we're going through a lot of this at the moment where you just look at it and you go, I mean, surely there's a better way than this.
Yeah, that's a good point. It seems like that Bitcoiners, we really want mostly Bitcoin, obviously, and a Bitcoin world one day. But it makes sense that governments want to continue with the fiat system.
Yes, no, absolutely. And I actually think that's the base case. So my base case, fiat's going to be around for as long. I would hazard a guess as long as I'm alive. So as much as I think that and I do believe that the fiat system is the reason we have a lot of these problems, I do not believe that the fiat is going anywhere anytime soon, because why would the government ever give it up? So I definitely think if I just take a big picture worldview where I think a lot of this is going, and I've held this view for many years now, I think stablecoins are a naturally emergent phenomena that particularly emerging markets have selected the US dollar. They would rather have US dollars than whatever currency they've got. So that, I think, is an emergent property. And by the way, their governments don't want them holding US dollars because they also want them to hold their shitty fiat. So we're in this like interesting world where the market naturally selects these things. And I've been of the view we're going to have a dual system where you've got hard money stores of value, right? And you can consider that in all sorts of things, Bitcoin, gold, stocks, whatever. And then you've got soft money, which is fiat that people will borrow against. Or sorry, they'll borrow against the hard money and borrow the soft money. So I think that's the general dynamic of where I see it going. So all of this is more or less on the expected trajectory, but you know, it's just that kind of color and flavor. I mean, the president of the United States has a meme coin. You know, that's kind of the world that we're in, as sad as that may be.
Yeah, definitely an interesting time. Just on that note, Jeff Booth says that the fiat system and Bitcoin are incompatible. And he does say that could be in a long, long time frame. But do you see that too?
No, not necessarily. I actually don't think they are, because right now they're not incompatible, right? Yes, look, maybe over the very, very long arc of time, but like I would say that for the vast majority of people, looking out 100 years probably isn't the most relevant thing. Yes, we can have like long-term visions, and that's like the macro trajectory. But I would say for the vast majority of people, that's just too long of a time frame. Like there's so many uncertainties through that journey that it's just very hard to do anything other than a bit of a philosophical type take. So my view is that I still think the governments will not relinquish fiat. I also when I look at the way that people respond to this market, there's only so many people who are going to properly self-custody their coins. And that's not because it's not the right thing to do. It's not because it's not the good thing to do. It's not what I would recommend. I just think that most people don't. And you see, how people interact, with the internet. In fact, I did a search the other day. My friend said this, and I didn't believe him. He said, how many people do you reckon actually know that Control Z is undo, right, on the keyboard? I forget the actual statistics, but it's like 15% or something. It's some ridiculous number. You're like, I just simply can't believe that. So if you've got, again, I'll get the numbers wrong, but if you've got 80%, 70, even 50% of the people who don't know that Control Z is undo, I'm not sure we're ready for a world where everyone's going to be self-sovereign with their coins. That's not the world I want. That's just the world that I see in front.
Yeah, that makes sense. So I was going to talk to you today about whether this is a bear or bull market, and we will talk about that. Can you explain first a little bit about what you use on-chain analysis for?
Yeah, so on-chain data is one of many tools that I use. It's certainly one that I'm quite proficient in. I've spent a lot of time thinking about it. Basically, Bitcoin is just a public and open ledger. And in that ledger, we've got the UTXO set, which is basically all of the coins in the supply held in the different packets. And each of those UTXOs, each day or each block, actually, each block, the UTXO changes. Some remain stationary, some are spent. So as coins are spent, that UTXO is destroyed and it moves to a new one. And what we can do is look at patterns over time and assign different information to those coins. So when a coin is acquired for the first time, we can assign a price stamp to it. We can assign a time stamp to it. And if we just imagine a hodler buys in a bear market and they hold onto that coin, that UTXO will accumulate time, right? Holding time. And it will also, if the price goes up or down, accumulate unrealized profit or loss. Now, when lots and lots of people are in lots of unrealized profit or lots of unrealized loss, that's the incentive, they then tend to take it. So from all of this information, if we aggregate it over time and over all the supply, we can see when lots of people who've held lots of old coins start taking lots of profit, and vice versa in bear markets. So we can use this to look for information. We can build a picture of the sentiment of the market. We can compare that information to derivatives and options and futures, ETFs, whatever. We can look across all these different market segments and build a fairly holistic picture of what we think the sentiment profile is, the demand profile, the supply, and it becomes market information. So what I do is I consider myself a Bitcoin analyst. I use all the available information to me to try and form an opinion on where I think things are going, how I think about things, building scenarios. I'm very much in the camp when people hear me say this all the time, but I have no idea what the future is going to do because no one does. But what I do try to do is frame up the probabilities of different scenarios using all the information and just trying to help people understand how the market might trade. So when it does, or if and when it goes to these certain levels, for me personally, I've found that just not being surprised is usually a massive step ahead of where I was when I first got into investing, where everything is a surprise. It goes up and I'm like, why did it do that? And then it goes down. I'm like, why did it do that? And I had no idea. So I tried to solve my own problem of saying, well, I want to at least understand why it's going these directions. And then once you understand a bit about the why, you can then say, well, now I understand how likely that is. And once you've got a set of probabilities, you can say, well, when something happens, I'm not surprised, which means I can now take action. And I think at the core of all of that, one of my big, fundamental pillars of how I operate, I can't control the market. None of us can. It's just too big. It's like the tide. You can't swim against it. You get sucked out to sea. The only thing you can control are your decisions. So I try to make my decisions. If I see Bitcoin at 80,000, I'm a very happy buyer. I made that decision when the price was at 110. So that's kind of the way I think about it. I try to make the decision well before I need it. And I also know if it goes up to certain levels, it's probably going to be very frothy. That's my thesis. As it happens, I look at the data and say, yes, it is now frothy, so I just may not be a buyer. And I try to make those decisions ahead of time.
So speaking of that, you in your newsletter wrote that there could be a dip, and it was a probability that we would go down to the 80s, which, like you mentioned, is a good time to buy for many people if your long-term outlook is bullish. So how did you see that, and what was the analysis telling you?
Yeah, so this is one of those things, I've been calling it an air pocket. So when we traded up from 73 up to 100, there was very few coins transacted between 75 and 86. And for whatever reason, markets just seem to hunt these areas. I've seen it so many times. So I had a reasonable probability that if we were to go down to, by that point, the short-term cost base is really that level of like short-term mean reversion. And the short-term cost base was about 92,000. And the reason why that level is important is that that's where all the recent buyers, it's kind of their center of gravity. It's where they're going to feel the most sensitive. So price comes down to 90, people will defend their cost basis. But if it keeps going, people start to get uncomfortable. And when people start to get uncomfortable, more people go, oh, maybe it's going lower. I'll sell now and buy back later. And then it does start to move and you get this kind of cascading type effect. And the logic was, if that happens, which we see happen often, and we get down to 86, then you've just got very little support under there. So the market kind of has this gravity to be like, show us what you got. All right, we're going to take it down to 80 and just see who steps in. The mechanics of how and why this happens, it's just one of those patterns that plays out time and time again. So at the very least, I had it as a relatively decent probability because most people wouldn't expect it, right? And when most people don't expect it and they're surprised by it, you get these violent reactions. So it was one of those things that I had on the table. And that air pocket, because we just chopped around up above 90, we were building a lot of supply above that level. And that's all people who are likely to capitulate and panic on the way down. So that was how I kind of came up with that idea of like, just be aware that we might go and backfill that air pocket, because if we get that momentum, it can happen really quickly. And it did. It basically got down to 90. And then within like a day, it's down at 86, and then it's down at 82, and then goes to 78. And here we are at 94 at the time of recording. So, like this is just generally how these things tend to play out.
It's quite incredible. I heard you mention that 52% of the Bitcoin bought was above 92. Is that correct?
Yeah. So the statistics here, and this is approximate numbers, but 25% of the supply in Bitcoin terms was bought above 90,000. So that means that somebody transferred it from a lower cost basis to a higher cost basis. So 25% of the supply, but remember that that's at 90 to 100,000, which is the highest price Bitcoin's ever been. So on a dollars invested basis, even though 75% is lower than that in supply basis, on a dollar basis, 52% of the dollars that have ever been invested in Bitcoin are up at this level. And most people think about their investment of any form in dollar terms. They also think about it, even if you're on a full-scale Bitcoin standard, you probably earn your income in fiat. So the Bitcoin price determines how much Bitcoin you get to buy with your salary. So in that regard, we've got a lot of capital up here. So even though there's coins held at $10,000, but someone invested $10,000 in those coins, they're investing 10 times as much money to buy the same coin at a higher price.
So that shows a lot of money coming in at this time.
Correct.
What is the likelihood that could be in a bear market?
Yeah, so I don't assign a high probability. I think it's important to then say, well, what is a bear market? What does a bear market look like these days? So my view of a bear market, I think most people would think like it's a year of just perpetual downside, going back down 60, 70, 80%. That's kind of what most people would think of a bear market as being. Let's just imagine we do go into a bear market. What's my definition of it? I would say getting down to like 65K would be that's where I think we would form some kind of a bear market floor in and around that zone. And that would take us back into the 2024 consolidation range. It would be where the true market mean is, which is the average cost basis for active investors. We haven't seen the kind of depth of drawdowns that we've seen in previous cycles thus far. It's actually been very, very controlled. And I think that speaks to the serious money that you mentioned that's coming in, which is true. Whether you look at 13F filings or the ETFs or whatever it is, We've seen a huge amount of capital coming into this industry, particularly into Bitcoin specifically. So my base case, I don't think Bitcoin belongs below $1 trillion market cap. And that's 50,000, 60,000 kind of zone. So with that as context, what does a bear market look like? If we got down to 65, then that would be where I think a bear market would bottom out. If we go to like 300K, 500K, a million, now I can envision an 80% correction. So in terms of the way the market's currently trading, and again, we've had a significant bounce today, I would be surprised if we go from 94 to 100 to 120 straight away. I think we have to have a gut check first where it comes back down and like you get this, gets back up into the range, everyone gets very excited, buys a bunch, and then it sells off one more time. That's something I can absolutely see happening. But I suspect that would set a new higher low. And then we continue to bounce. But so my base case is that the macro monthly scale uptrend, which has been in effect since FTX, I still think that remains in control. So I remain on the bullish side. But this is one of the things you have to constantly look at how the information plays out. But nothing has really changed for me, right? If we get back down to the 80,000s, I remain a very happy sat stacker. And if we got down to 65K, I'm even happier because that's the kind of level where I'm like, I think panic will be through the roof. That's MSTRs cost basis as well. I can see the headlines. It's all over. It's all dead. So it's one of those things. And I was talking about this the other day. I did buy it I was like 78.5 or whatever that low level was. And I bought with money that I didn't actually plan to invest at that point. I was like, okay, I can make it work because I thought it was just a really, really good price. And I did that full well knowing that we might go down to 75. We might go down to 65. But I had to weigh that probability of saying, yes, we could go down there, but I don't assign a large probability to it. Would I be angry at myself if I bought at 78 and it goes down to 65? Probably not, right? I'd probably find whatever other income I can find to buy it again. If I didn't buy at 78 and it went back to 100, would I be angry at myself? Yes, I'd be actually much more annoyed at myself for that scenario. So for me personally, Check the Hodler was very happy to stack down there because in my framework, upside is actually more painful and I like trying to pick up those opportunities.
I just want to be clear when I say the bear market, that would be the cycle bear market, and that would mean a long time chopping around low. But that's unlikely because from the past, we haven't gone into a bear market less than a year after the halving. So that would be unlikely, but possible.
Yeah, I don't use that halving too much as an anchor. I think a lot of people do. I generally don't because I don't think the halving has that much of an impact. And I've got a series of charts that kind of shows ETF flows, Michael Saylor buying, sell side pressure from long-term holders, all these things that like give you a sense of scale of how big the market is. And then I always put issuance there. And most of the time you have to like zoom in because you can barely see issuance above the zero line of the chart because it's so small by comparison. So I've been on the camp where I don't think the halving matters that much. And actually, I've been describing this recently. In a way, 2017 was an environment where the world was responding to Bitcoin. It's this new thing. It's growing up. It's going through a wave of adoption. 2018 to 22, we had like a build out of the industry. We had exchanges grow up. We had leverage. We had futures. All these things started to develop, but it was very boom bust choppy. And then in 2023 onwards, it's much more institutional, much more sophisticated, much more serious. And in that kind of general context, this cycle feels different. And rather than the world responding to Bitcoin in 2016, 17, I would say that Bitcoin is now responding to the world. People kind of have an idea what Bitcoin is now. So that's why things like macro flows, it's why tariffs have an impact, it's why just the general market performance is more or less responding via Bitcoin rather than them going, what is this weird thing, right? I think we've kind of transitioned into the Bitcoin responds to the world category of the world.
Yeah, that's very interesting. We'll see going forward, right?
Yes, we will.
I wanted to ask you about the recent dip because sentiment was really bad when that happened. And even myself, I am like you, hodling for the long term. However, I do have some proxies and I'm hoping it continues to go up so I can sell those, get out, and then just Bitcoin because those are a little bit too gut wrenching for me. So I've heard you say MicroStrategy might not do what people expect. Can you explain that?
Yeah, so MicroStrategy is fascinating. I find it such an interesting asset to get my head around. And initially, as most people, it kind of struck me because it went on that spectacular rally last year. Truly tremendous performance. Was like 8x off the bottom or something. Really quite remarkable. Eventually, I said, okay, something just doesn't feel right. But just the same way that Bitcoin broke my assumptions of my previous life, I probably should look at this weird company and just try and understand more about what they're doing. So anyway, I went down the rabbit hole and I've done 2 pieces on MicroStrategy so far. One was very much my initial, I'm going to try and think through this problem. What is this thing? And one of the big conclusions, there's probably 2 big conclusions I came up with that. The first one, which is probably not, this isn't a special opinion. I think a lot of people have come to the same view. It's probably going to perform very well in the bull, probably going to have a hard time in the bear, right? And by bear, it's any kind of serious downdraft. And the reason why I came to that conclusion is the company's business is selling volatility. They package up volatility, they securitize it in bonds, equity, all sorts of things, and then they sell it to different pools of capital. Bond traders who can't buy Bitcoin, equity traders who can't buy Bitcoin. He's giving them some kind of exposure. A lot of those bond traders, they don't even care about Bitcoin. They just know that if I buy this thing, it's trading at this premium. Here's my risk profile. I can hedge it here, here, and here, and I've got a fairly high probability of getting some kind of a return. So a lot of those bond investors actually don't care that it's got Bitcoin in it. But what MSTR is doing is leveraging the volatility of Bitcoin, amplifying it, and then selling. So first things first, is there product market fit for that? Absolutely. Wall Street loves volatility. They are selling a product that Wall Street wants. That's the first point. The second thing that I thought through, and again, not a special opinion, is that in bull markets, he's going to be much more able to raise capital, sell equity, buy more Bitcoin. So in a way, the company is designed to buy high, right? Now that's fine because they can buy high and it keeps going higher. Bitcoin has this number go up technology. It seems to keep doing this. So in a way, over a long enough time frame, they're probably going to be just fine. So therefore, it functions very much like a 2x levered Bitcoin exposure or more. But that works in both directions. In a downdraft, it's going to move down much angrier. And also, he can't raise as much money, right? Some of the debt that's already out there will go into, not distress, but it can go more distressed than it was. All of this impedes his ability to buy more Bitcoin. So in a way, the company, it very much is a levered exposure. It's going to do very well in the bull. It's going to do not so well in the drawdown. And we've seen that. We've seen MicroStrategy down more than 50% from the highs. Bitcoin got down like 25%. So it's about 2x. So it's kind of that general magnitude. Now, the final one is a much longer term view, right? Where does this all end? My view is that MSTR, like all of us, is going to go through their BitLife crisis, where it doesn't matter who you are, you eventually, if Bitcoin keeps going up in price, you have to put more money in to buy less BTC. Now, that's fine because for most people, that's my strategy. I'm fully aware that all of our supply curves is like a logarithm. You reach your BitLife crisis, you can't buy more. But that also, by definition, means that their growth metrics like BTC per share, Bitcoin yield, by definition, these must trail off towards zero. They are trending towards zero. So I take the business and say, what happens if they just stop doing anything? What's that extreme look like? And the extreme is that the market would probably price it close to its ETF holding value because that's the equity that's left. And if equity, business equity is basically whatever's left over in a corporation, once they settle all their debts, settle all their senior obligations, equity is the only thing that's left. By and large, that equity is the Bitcoin treasury. So the MSTR stock, once the gravity is back towards treasury value and a MNAV of 1, that's where the gravity is. The company needs to continue to generate excess volatility so they can sell that to Wall Street to keep that MNAV higher. So it's an interesting dynamic because the more that they push the MNAV higher, the more stock they can sell to buy more Bitcoin to build up the equity. So it's a fascinating business, but it is going to go through some serious booms and busts. And long term, they will, by definition, as their growth metrics go to zero, they must find a new business model. Now, I can also look at that fairly objectively and say that if they have all this Bitcoin, do they become a bank? Like they've got all this pristine collateral. What do they do with it? I'm sure they'll find something to do with it. But so far, that side of it is unclear. So there's a bit of a speculation on what are they going to do with all this Bitcoin at the end of the day. They've got it, but what are they going to do with it? So that's one of those interesting dynamics. I find it fascinating. I continue to study it and pay attention to it because it's taught me a lot about how the finance system works, but it is also an endlessly fascinating rabbit hole of what is truly a unique business model. So it's volatile, but it's definitely intriguing.
Yeah, so it'll be a little bit up to Michael Saylor to keep innovating to see if he can, how long he can keep this going. And then most likely, we don't know how long that'll take, but the NAV will go to one. And then it's like an ETF.
I would think so, but at the same time, let's imagine that they become a Bitcoin bank, and that turns out to be a, look at some of the banks in the world. They're able to have enormous leverage ratios because they've got the collateral and they've got the business model. So it's very possible that they could become something that truly is very, very unique and new. But I also think about things and say, well, if because MSTR got to about 100 billion, was its close to its peak market cap. So you got 100 billion. Bitcoin's 2 trillion. So if MSTR was to go to $1 trillion company, it's now half as big as Bitcoin, but they've got, single digit percentages of the BTC. You start to think about how does it achieve these market cap values? What kind of multiplier, the MNAV ratio, how big can that get? And, the market in a euphoric bull, the sky's the limit. But just like Bitcoin, the higher that goes, the more that compression is going to be on the other side.
Yeah, that makes sense. So where do you think we are going in this cycle? I know you've given many price predictions and they're just predictions. They're not financial advice. But based on what you've seen so far, where do you think we're going?
Yeah, so look, I still remain constructive on 2025. From basically, in fact, in December, I released a report and then followed it up in the start of this year, talking about I think Q1 was going to be choppy. I just had a base view. I think Q1 is not going to be just smooth sailing, which I think more or less is what we've seen, because the world's got to adjust to this new administration. There's new policies, there's tariffs, we are in many ways reshaping the global monetary system. It's starting to happen. There's talks about how the US deals with like the security arrangement of the world. How does Europe finance that? Does they have to spend more on defense? Like there's all these things that are very, very big picture, and the world's got to adjust to that. If you look at equity markets, they're also fairly richly valued by a lot of metrics. But at the same time, like there's this process of like they need to get people to buy the long end of the treasury curve. So there's these big pictures. These are really, really big challenges. So my base view is that 2025 is going to be open, pretty choppy, but I was generally positive. I think that 2025 Bitcoin will end higher than where it opened. So that's my base case. I was expecting a drawdown like we've seen. That may not be over. It may be over. We'll see how that plays out. My base case will probably head higher, but then I have to flip around and say, well, how high can we go? And I've got this thing that I call my topping cloud. It's not a perfect model, but it's basically looking at various measures of how much unrealized profit is in the system. And the rationale is, and we have seen this now twice, when the ETFs went live at 73K, that was the first major peak of sell side last year. And then in our 100K zone is the second major wave. If we combine both of those, the amount of long-term holder coins that came back to life, 3.2 million Bitcoin, which is now bigger than 2017, which was the largest previously. So that's two things. That's a huge amount of sell side profit taking. It's simultaneously a huge amount of demand to soak up those coins. So I balance both of those views by saying we have serious buyers in this market. But if the market goes up to 150K, just about every metric that I look at that is cyclically based, a lot of people will look at MVRV or Mayer multiples. These will all be in very, very heated territory. Heated doesn't mean the market has to end there. It also doesn't mean the market has to go there. It just means that historically speaking, there's less than 5% of all trading days that have a MVRV higher than that level. And this is across multiple different variants of it. But basically, if we get to, and in fact, those levels are climbing because as demand comes in, it's raising that floor cost basis. The mean reversion models are higher. Therefore, the price goes higher. I think it's actually 160. I checked this morning. 120, 30, up to 160 is kind of that zone where I just expect a lot of sell side. If demand comes in and soaks it up, that's great. That means that the market can just keep going. And we see this. And like, that's why I think predictions are kind of useless because who knows, right? Who knows how much demand is going to come in and soak this thing up? We could just keep going. But from a probability standpoint, less than 5% of all trading history has an MVRV and all these other metrics above 150, 160K. It's just an improbable scenario. Now, that doesn't mean that Bitcoin's not going to go to $1 million. It just means it's probably not going to go 150, 1 million. It's going to take time to get through that zone and allow those mean reversion models to catch up. Demand's got to come in. And the other thing I think people often miss, going from 100 to 150K, that's $1 trillion market cap. And I balance this view, right? I always try to hold two views at the same time. That's a huge amount of money. $1 trillion is a huge amount of money. Gold went up $6 trillion last year, right? So I balance both of these things that once sound money gets moving, it gets moving, right? So, it's one of those things you've got to hold both these views at the same time. It's equal parts careful, because when you get up and people start selling, you've got to be careful. But it's also astounding and incredible to see the demand coming in to soak up 52% of the value at a price above a 90K. That to me is incredible and makes me very, very constructive.
So are you saying that we probably chop around in the first quarter and then go all the way to 150? Isn't it likely to go to 120 and then correct again and then go back
probably.
up?
Oh yeah,
Yeah.
no, totally. That's the thing, right? I believe we're in a monthly scale uptrend. What form that takes, and this is why I don't generally do predictions, because who knows, right? The market's going to do what the market's going to do. They're the levels where, if in my decision framework, I can't judge where the market's going to go. If the market went to 80, I'm a very, very happy buyer. If the market goes up to 150, 120, I'm probably going to be in a sit and wait mode, and I'll just see how the market goes as it breaks through. Does it do it in one go? Does it have to correct? Do we have a bear market from that level? All TBC. I'm probably not going to be all in everything I've got at 150K unless there's some other evidence that comes in to tell me otherwise. I'll probably allow the market to find its level, and if that's higher, so be it. But my decision framework is I can't buy buying when all of my models are going to say it's overheated, because if it then goes down, I only have myself to blame. And if it keeps going higher, that's great. The rest of my holdings go up. I'm a happy man.
Yeah, that makes sense. And what is SOPA and MVRV telling us right now?
Yeah, so these are both the two, of all the metrics that people should learn if you do want to get your hand into on-chain data. Start with the realized cap. So the realized cap is the on-chain market cap. It is my favorite metric. It's the backbone metric. It's the beating heart of Bitcoin's investing profile, because it shows you where the total value saved in Bitcoin is, right? Because if you buy a coin at $10,000, it remains saved at that price. So the realized price, or the realized cap, is basically the amount of value that people have saved in Bitcoin. And it's all-time highs of 860 billion plus right now, which is incredible. So that's the wealth that's been saved in Bitcoin. Its market cap is higher than that. If you take a ratio between those two, you get MVRV. So MVRV tells you about the unrealized profit or loss, but it also tells you about how far we've stretched away from that mean reversion model. Of the market cap, how much of it have people actually invested, that hard capital that people have put in? So that's the base case. MVRV and SOPA are actually systemetric. So MVRV stands for market value to realized value ratio. So market value is price or market cap. Realized value is realized price or realized cap, depending on which one you want to use. It's the same thing. So it's telling you about what is the value of Bitcoin versus how much people paid for it. That's kind of the way to think about it. SOPA is the systemetric, stands for spent output profit ratio. It only looks at coins that are moving each day. So when coins are spent on chain, they're going to lock in a profit or a loss. And we look at this in aggregate. Now, what we've seen during this correction is as we get up to 108K, I think was the high, 108K, most of those models were not overheated, but hot. They were toasty. It's the kind of level where we do see some kind of resistance come in, and we have seen that. And we were seeing SOPA, we're seeing very large profit taking. So you've got people who are in a pretty significant amount of profit, and they started getting taken. That's now my confluence to say, okay, that looks like sell side. That's probably going to put resistance in. On this correction, we've broken below the short-term holder cost basis. So short-term MVRV dipped below its break-even level. For me, as Check the Hodler, my base case is that I like to buy when there's blood in the streets. That's my preferred time to DCA. I will constantly do my regular DCA when we get the conditions that short-term MVRV is well below 1 and short-term SOPA is well below 1. That tells me that the average guy is feeling a bit stressed about his position and he's starting to panic. And the reason why I use short-term holders is because it's a 5-month cutoff. And people who bought in the last 5 months, we're talking about top buyers. By definition, we're talking about people who bought high, who are now panic selling low. That's my signal for blood in the street. So we saw both of those get really nice waterfall dips. Short-term SOPA really just cratered. Tells you a lot of people who bought high sold low. That's where I become very, very happy, because at the very minimum, I now know that I'm not buying high, right? And as a hodler, if I can just not buy high, I will get more sats per stack. So if I compound that, if I'm getting 10%, 5%, 15% more Bitcoin every single time I'm DCAing, simply by just waiting for top buyers to sell at a loss, by doing that over my whole stacking journey, it compounds, right? Imagine just adding 10% to your compounding rate simply by just waiting for when the dumb money who bought high starts selling low. And otherwise, you flip it around. If you keep buying high when everything's overheated, I've just had very poor success with that. There's nothing worse than you putting a nice chunk into Bitcoin, and then like 10 minutes later, it's just a giant 10% red candle. We've all been there. We've all seen it. I've been in this market long enough now where I have seen enough of those and I've bought enough of those, and I now want to just get better. I want to get better at being a Bitcoiner. So for me, that's actually just being patient and avoiding buying high and just trying to look for those points of discount.
So these tools can really improve your DCA, and they could also help people who want to take lifestyle chips off. They can really help. I mean, it's not 100%, but they help.
Absolutely. And that's the way I think about it, right? We've got all this information. And, some people, for a lot of people, they don't care. They just buy every day, and there's nothing wrong with that. It's perfectly fine. But for me, in my journey, in my personal story, I think a lot of Bitcoiners, we've gone down the path of trying to be a trader. We've done the whole trading thing. We've lost a bunch of money. We realize I don't want the stress. I don't want the pain. I don't write for traders. I actually don't think that people should trade. For me, I'm just a happy buy and hold, but I like to I'm not trying to time the market. I'm just trying to be smarter about when I buy the market, right? Rather than just blindly buying at any time, I just look for those opportunities where I'm like, that's a nice price. Now I can be a bit more aggressive. And even if we go lower, and here's the other way I think about it, in the chop consolidation range of 2024, we had three major corrections, 56K, 53, 49. If the market's destined to go lower than that, that's fine. That's just where the destiny wants to go. I'd rather buy my coins at the lowest possible price, right? With my monthly salary, buy at the lowest possible price, because then if it goes lower, I'm not actually underwater by that much because I've already got a relatively low cost basis. Whereas if I buy every time the market's rallying, I'm always going to have a higher cost basis. So the drawdowns, which do and always will happen, they just feel worse, right? So it's just shifting everything just that little bit, knowing that Bitcoin goes down all the time. It goes up all the time too, but it goes down a lot more. And actually, well, sorry, that's not statistically true. Statistically speaking, on a daily basis, Bitcoin goes sideways, less than 1% in either direction, 40% of the time. It's like a bell curve. It goes up 30% of the time, down 30% of the time. So this is why day traders blow up, because if you go long, there's a 70% chance, 40% it goes sideways, 30% it goes against you. No matter what position you put on, you only got a 30% chance of being right at any point in time. Most of the time it goes sideways and just bores the hell out of you, and you end up making a bad decision out of frustration. It happens all the time to people. So, but if you do that same analysis, not on a daily basis, but on a quarterly basis, there's a positive skew. If you're buying and for any quarter, you just buy and you wait for 3 months, probability is you're actually going to be in the money. So over a long-term time horizon, there's these positive skew, and sometimes you get 100% plus moves in a quarter. So it just helps kind of frame up what are the expectations. Day traders get wrecked for just probability reasons. Long-term hodlers always do better because the odds are quite literally in your side.
I've heard you talk about check the analyst and check the hodler. And check the hodler understands Bitcoin very well and has a long-term plan. And that's why you're able to have such a great attitude.
Yeah, and I've found that breaking these apart is really useful. And the reason why I have checked the analyst and checked the hodler is because my audience is quite broad. We did a survey recently. We've done two in the past where we've asked this question: what do you identify as, like a professional trader, a finance professional, or a hodler? And it always comes back with the first one we did was like 96% hodler. The latest one we did was like 89% hodler. Most people are hodlers. I'm a hodler. And the idea of a hodler is someone who we just believe in Bitcoin. We're here for the long term, but we also want to understand why the market works the way it does. So I split them up. So check the analyst's job is to be very objective, call the market how I think, build the scenarios. I can't predict where the market's going to go, but I think if we go here, this is what it would look like. If we go higher, this is what it would look like. So Check the Analyst very much speaks to the folks who are finance professionals. Maybe they manage money and they're using this as part of the input to their process. Also probably retirees who are a bit more price sensitive, right? They don't particularly want to go through a long-term bear market. So Check the Analyst really appeals to people who are in those types of buckets. But then all of us have a component of us that's Check the Hodler, which is that I don't actually mind buying for my long-term stack, but I also want to understand how the market works. So I try to use these two personas to both help people draw the dots for their own personal circumstance, but also give that, like, maybe the analyst is saying it looks like a bear market, right? The analyst can say that. But then the hodler can say, but I'm a buyer in bears, like that's what I do here. So it's more of it. It also tries to balance that, like, here's the objective information to the best of my eye. What am I going to do with it as an individual? So people can then get my more honest, like, this is how I actually feel about the market is the hodler. This is what I see is the analyst.
Yeah, that makes a lot of sense. So if Bitcoin is going to continue to go much higher, I've heard you say that alt season is over. Do you think there's a case that a rising tide will float all boats, or do you still see that the alt season is over?
Yeah, I wouldn't so much say alt season is over. I think it's changed. I think it's different. So one thing we've definitely seen this cycle is it's been a lot more selective. We haven't seen like a rising tide lifting all boats. It's been a bit more of a, for want of a better term, stock pickers market. Some assets have done well. A lot of them just haven't. It's been very, very selective. And I'm of the view that that's probably going to continue. We've seen a lot of fresh money coming into Bitcoin, particularly via the ETFs. This is just new capital that's getting access to it. We have not seen, even like on a market cap weighted basis, we've not seen the same demand for the Ethereum ETFs. And I also think that if we look at just how these assets have been priced, a lot of investors and traders are looking at it and saying, okay, if Bitcoin is that sound money monetary asset, and I think the world's now worked out that like Ethereum's ultrasound money meme didn't work. I don't think that investors, generally speaking, are buying that money basis. By extension, and they look at Solana and say it probably isn't money either, and all these other things, and say, like, if Bitcoin is the monetary asset, how do we value all the rest of this stuff? And the problem is that when you go down that exercise of saying, I'm going to value this, whether via discounted cash flow or by, PE multiples or growth multiples or whatever, what I think is happening is that they're running these numbers and they're coming up with significantly lower prices. So I think there's a lot of skepticism about saying maybe a lot of that speculative premium has already been baked into these things. And it's not so much about how much higher can they go. It's actually a little bit more about, can we justify the price they're already at? And I think that's why we've had such a tepid demand profile. So look, I'm never going to bet against humans being greedy and the casino playing being open, right? That's always going to happen. But I do think that when you've got X million tokens, of which most of them are just long tail garbage, there's just a lot of spread, right? There's a lot of assets that people need to absorb, and the market just doesn't have enough money to buy all these things. So it's probably going to start concentrating into a few of those bets, which will run. But then those bets, I think, will rapidly reach a point where you go, you can't justify this stuff based on fees, for example. And, I've run this personal experiment where I looked at, in my prior years, when I used to trade shitcoins, I looked at how much ETH I held at my all-time high ETH balance. And then I compare it to how much ETH I spent in gas. And you realize that if there's no demand to hold a chunk of it, it's single-digit percentages, low single-digit percentages of your demand is gas. The most of it is the holding value. So then you realize, if people are only valuing this stuff based on gas expenditure, it's very, very hard to justify a $400 billion market cap. It just is. Even if you give it a 20x growth multiple, it goes down to $100, $200 ETH price, which is hard. So you realize there's a lot of monetary premium already baked in. And maybe that's a bull case. Maybe that's saying they are some kind of monetary asset, but I think given the performance of these things over time, it feels very selective rather than rising tide lifting all boats.
Yeah, that's very true. Solana's fees are really low, but obviously what's going to be the use case? For now, it's just gambling and trading on pump.fun and other places like that. So The way I see it, though, people are going to continue to trade, and there's that unit bias when it comes to Bitcoin. So I don't know how long that's going to take, but I suppose over time, it's already happening with certain assets, like you said.
And these things come and go, right? We've seen quite a lot of steam coming out of the meme market recently, because basically everyone realized it was just all insider scammery. So, we've already seen that marginal demand flow out. And that's the other thing I think is important to note. In 2017, you had to buy Bitcoin to speculate on Poloniex and Binance and all this stuff. So Bitcoin was the casino token. In 2020, 21, ETH was the casino token. So you could go and do yield farming and all that stuff, accruing tokens, which you could then sell. Solana has been the casino chip this cycle. And I think that a very large component of that casino has now dried up. So the question is, where does the marginal demand come from once you reach that point? And I think that's more or less where they are. So the reason I poke at Ethereum quite a bit is just simply because it's the biggest example of this, but it's also the furthest progressed. It's gone through the DeFi season, the NFT season, the stablecoin season. It's gone through all these dynamics. And every other chain is some derivative of that behavior. Every previous alt cycle has almost always been based off some kind of new distribution mechanism. ICOs, yield farming, memes. There's always some kind of new token distribution mechanism that is the fuel for these bulls. I don't know what the next one looks like. I'm sure there'll be one, but it's one of those dynamics. I struggle to see the long term. I mean, at the end of the day, if all we've built here are trading vehicles, you've kind of got Bitcoin, stablecoins, and speculative trading. That's kind of the three use cases of this whole industry, which it's kind of a brutal condemnation of hundreds of billions of dollars invested in a decade plus of work. What do we have to show for it? There's just not that much there, in my view.
I hear people talking about real world assets, but I don't really know what they're about.
No, and I also think that that's kind of a misguided approach as well, because if you talk about real world assets, I mean, stablecoins are a real world asset, right? Tokenized dollars. If you tokenize a house and then the house burns down, what's the value of the token? The problem is always this oracle system of how do you get the information from the real world onto the chain? And if we're going down this path, do you need the decentralization? Because if we're talking about real world assets, if it's a bond, it can be frozen by the bond issuer. If it's a, whatever the token, stablecoins, Tether can and does freeze all the time. So do you actually need anything beyond a high performance database to do that? Probably not. What is a blockchain at the end of the day? It's a very, very high redundancy, inefficient database. So why are we actually going backwards and using a less efficient system when you can manage all of this in a SQL database? So in a way, we already have a lot of this stuff. Yes, I'm sure there'll be some kind of internal blockchain technology that the NASDAQ builds and uses, but they also probably don't need to, right? Here in Australia, our exchange, the ASX, they spent however many millions of dollars studying this, and even their conclusion was, we don't need this. It's actually not better. So I'm just very, very skeptical of all this real world asset stuff. I think it's a bit mimetic. And even if that happens, even if we get a world where every stock is tokenized, I still don't know why that drives value to the gas token. Because in a way, I also think about institutions. Do institutions really want to have to go to the pump and put petrol in their car in order to trade? No, they have a brokerage fee. They want everything priced in dollars. So what's actually going to happen is they're going to have a blockchain, maybe like Base, where Base is going to make USDC the base asset, where that's the fee, and it's a flat $2, $5, $10, 15 cent brokerage fee. That's it. That's the end of the story. No one wants to buy a volatile asset for their gas token in order to trade on the stock market. It's just extra steps. I'm very, very unconvinced by it particularly as a bull case for crypto.
That's a great explanation. I like the explanation about the house. Makes a lot of sense.
I struggle to see the connect there.
Yeah. So historically, what usually kills the bull market for Bitcoin? And do you think we're going to get all the way into 2026 or sometime this year?
Totally remains to be seen. I mean, at the end of the day, I think Larry Lepard's been very right in that we're going to have a massive currency debasement process, right? I think everyone's aware that there's a sovereign debt crisis. The challenge is these things take long time to play out. They're just such a slow moving beast. They do tend to happen gradually, then suddenly. There's going to be many suddenly moments. But this is one of the things. This is what Larry talks about. He's been waiting his whole life, observing this from the lens of sound money. And it looks like it's getting closer, but you just never know. So in many ways, like I buy Bitcoin because it makes a hell of a lot of sense. It's a growth asset. It's continuing to grow in adoption. It's clearly on its trajectory towards being a global store of value, pristine collateral. Much the same way as gold. The gold price has been going up significantly in recent years, which is also telling us this story. Fiat is not getting more valuable. It will go through booms and busts. And I think Lynn Alden does a good job of explaining this. She says that, sometimes I will hold dollars as an asset because I think they're going to outperform everything else. But it's usually a short-term trade. And that's I think, the correct framework for this stuff. It's certainly this monetary system has been on the verge of collapse for as long as I've been on this planet. So it's one of those dynamics that, like, if I'm talking about my whole lifespan, I'm not expecting something to happen in the next 5 years, but I'm certainly preparing for it because the probabilities continue to grow as this thing gets closer and closer.
For our last question, James, what are you reading at the moment and what do you do for fun?
A great question. So in terms of for fun, two of my pastimes at the moment I'm really putting attention on is tennis. So I've in my second or third season of learning tennis, which is always good fun. And I'm also an avid chess player, and I'm certainly trying to ramp up. One of my New Year's resolutions was to get my ranking higher. So I'm slowly working on my ELO there. So that's what I do generally in my spare time. And at the moment, I'm reading a book called How Nature Works by Per Bach, which is tremendous. It's basically a story about, well, it's not a story, it's like a series of scientific observations of how complexity compresses down into simplicity in a way. So, whether it's earthquakes or seasonal patterns or population distributions, they're very complex systems, but they all seem to exhibit the same behavior over the long term, which is that large events, large migrations, large earthquakes, large seasonal events, large things happen infrequently and small things happen very frequently, and they compress down to this interesting power law. So it's kind of one of those inbuilt laws that just nature seems to follow. Very, very complex systems all seem to have the same price patterns. That's the same manifestation of frequency versus magnitude. So it's a really, really interesting book. That's what I'm currently reading at the moment. I've also been reading Mistborn, which I think is a fantastic series. I've just finished the first book. That's I think, again, that was a Lynn Alden recommendation. And what I liked about that, it's a fantasy book all about, there's like a magic system, but I like it because it's got a series of constraints. They can't just do magic for forever. They've got limits, right? They've got to consume certain materials, and there's pushing and pulling on certain elements. I think it's a fascinating story, and really enjoyed it.
Very cool. I think I told you I used to play professional tennis. I came to the US on a tennis scholarship. And
Right.
now it seems like everyone's going to pickleball over here, and tennis is getting
it's happening.
through.
No, pickleball is in fact, they're replacing one of our local courts with more pickleball courts. I can't say I'm a huge fan of it because the sound drives me insane of the little paddles going. But no, I'm really enjoying tennis. It's good fun.
And better exercise, I think. So good for you.
I think so too, yes.
Well, thanks so much for joining me today. Tell us where people can find you.
Yeah, thanks, Paula. It's always good fun. You'll find me over at checkonchain.com and at _checkmatey on Twitter. So, basically we've got a newsletter. We've got a charting website where you can get pretty much any Bitcoin chart you could possibly want. That's all available for free. We've got our paid newsletter, which is, I just try to help people understand what's going on, thinking about things in advance, and just trying to help navigate what is a pretty chaotic market cycle, but very much for hodlers, not for, and traders will get value from it, but I'm certainly not writing for traders. It's for hodlers who want to understand what's going on.
Well, I have to say it helps me a lot, and amazing information. And yeah, it gives you a little bit of peace of mind just knowing what's going on chain.
If people are simply not surprised when the market does something, then I've done my job.
Yeah. Well, thank you for joining me, James.
Thanks a lot.